As the title slide shows you, welcome to the Yes, We're All Geniuses market. I've said it again and again, the resource sector is tough. It's not easy. Early stage exploration is tough. Odds are against you, but I love the exploration and discovery process. So, these stocks have been what I've bought for the last 3 or 4 decades. But the thing with this sector is, if you're lucky enough to be around during one of those brief bull markets that this sector does get every 10 or 15 years, give or take, it really is a market that can generate life-changing money for investors. And I'm the kind of guy I would normally hate to even use that phrase because it just sounds so cheesy, but it's true. This is a market where if you're in the right part of the bull cycle in these stocks, they really can generate those kind of gains. And you're here, so consider yourselves the smart ones. Nothing like a full-on bull market to make you look smart. Rising tides lifts all boats. Pigs are flying. We're all feeling pretty damn smart, as we should if we've been around for a few years. You deserve it. You should feel that way. But don't forget to be somewhat sensible about it. In a bull market like this, take some profits. Try to get your capital out. Maybe there's something completely outside of the investment space. New boat, new cottage, whatever. Definitely, you do this stuff to generate money for stuff like that. But remember also, this is the kind of market where, high conviction holdings that are working out literally can generate life-changing gains. So, it pays to be brave some of the time in this kind of a market and just let things run. And which is what I'm doing with a few things right now. I know my slides are too wordy, but, precious metals, it's all about trust or more lack of trust. The thing about gold that's extremely important, I think it's the most important attribute to gold, is it's really the only major asset class where your asset, like if you own bullion, your asset is not somebody else's liability. You can buy treasuries and that's your asset, but you're still, there's always the other side of the trade, the US government, European Union, whatever it may be, JGBs in Japan. There's another side to that trade. There's always another actor that's involved in the trade where who the hell knows what could go sideways. That's not the case with bullion. It's really the only major asset class where your holding is not somebody else's liability. That's exactly the reason why central banks in particular have really come on board strong in the last few years. Those of you that have listened to earlier talks to me, I know that I really measure this bull market as starting back in 2022, when a bunch of sanctions were imposed on the Russian central bank in particular. A bunch of its assets that were domiciled in New York got seized. And, don't get me wrong, I'm totally all for that. I fucking hate Putin and I wish somebody would take him out. So I'm not arguing against that happening. But the simple truth is central bankers always viewed their assets as being sacrosanct. Like nobody's going to do that to us because we're a central bank. And when that happened to Russia, that really freaked out a lot of central bankers. And that really took the move away from, U.S. Treasuries probably as the main reserve holding, JGBs, Japanese Treasuries being probably next. Gold, which had, back in the day, 100 years ago maybe, was the main one, had really drifted off and become like third place, fourth place, fifth place for a lot of them. Well, that's changed in the last 3 years. As of about a month ago, gold is again the biggest central bank reserve asset. If you look at the top 10, 15 central banks, it's gone back to number one. And this is, it's important to understand, it's easy to get caught up in short-term trading. And, you get cyclical trends, to me, this is a secular trend. I don't think this changes anytime soon. What happened with Russian central bank seizures, that changed the landscape, I think, irrevocably for most of the central banks. So I don't think this buying, and it's not insignificant. Central banks have been buying, and some of them don't really report or are very coy about it, like the Chinese central bank. But they've been buying at least 1,000 tons a year for the last 3 or 4 years. And I think that goes on forever, pretty much. I think we've seen a basic change. So how long does this bull market go? I've got no clue, but I don't see a lot of short-term red flags. Now, in terms of the gold market itself, this is about a 1-year chart, give or take. I was actually pretty happy to see, I was happy to see this. I mean, that spooked a lot of people. It was a pretty hard pullback, but this is, keep in mind, this is what bull market corrections look like. Bull market corrections tend to be very sharp, very fast. They tend to spook people, scare money out, and that's pretty much what they're designed to do. I mean, there's really not a huge amount of difference between this one and this one. The scale's a lot bigger because the price is higher, but this is actually what you want to see. If you don't see these occasionally, you got to really start worrying about the longevity of the market you're in. You want to see corrections in a bull market because that's what adds to the longevity of the market. So, I mean, I don't see anything in this chart that worries me at all. I mean, this chart looks great, hunky-dory, all ahead, full steam. Let's keep having some fun. Silver is pretty much the same story. Silver got more parabolic, so not too surprising. That's about a 1.5-year chart, give or take. It got a lot more parabolic. So when it pulled back pretty hard, and it definitely had to, unlike gold, there was a little more shaking out involved here, but it looks like we're kind of getting back on track now. And again, I mean, I presented right around here, and I remember during that presentation saying, look, like everybody should be prepared for a pretty big drop here near term, because that's when something gets that parabolic, you're going to see a pullback like that. It's just a matter of how long it's going to take. So I was totally fine with seeing that. I don't, to me, in the case of both those markets, these are bull market corrections. I'm not the least bit concerned about this market continuing. And just understand, I'm a guy that came into this from the mining side, the exploration side, the exploration consulting side. I'm not a gold bug. I'm not a silver bug. But even as somebody that is neither of those things, I've got pretty high confidence and conviction that this market keeps going for a while. Here's the venture index. It's not much of a proxy. It's a fairly crappy proxy, to be honest, because there's periods where the big story is cannabis, or the big story is whatever the big story might be that everybody's promoting. But it happens to be where most of the exploration stocks are listed. So it's a good proxy as we've got. And again, you can see a couple of pretty sharp pullbacks. It's climbing out of that now. And understand that before 2025, we had 3 or 4 years that looked like that. And before 2021, we had several years that looked like that. People that trade these stocks are kind of conditioned to, at the first hint of trouble, everybody heads for the exits. And so you see these pullbacks like this. But again, I suspect we're going into a market where I don't know what the ultimate high for this index is going to be, but it's going to be a lot higher than this. And as bull markets mature, traders get less and less scared. So they tend not to jump out as fast when there's some minor thing that happens. So you may see less sharp corrections and more upside. But as experienced traders, keep in mind, as the famous Warren Buffett quote goes, be greedy when others are fearful, and be fearful when others are greedy. I mean, you guys will probably know when we get to that point of, a couple of years out, whatever it is, where nobody thinks anything bad can happen, and the venture index is going up 40 or 50 points a day. Start taking money off the table. You want to be a little bit contrarian at all times with these things. This is copper. Copper's kind of interesting. That's the, as you may recall, this is the tariff tantrum, if you want to call it that. Copper increased when Trump was going to tariff the hell out of it, and then when they clarified, well, no, there's going to be a tariff, everybody blew out their copper positions because they realized they wouldn't get that added amount on top because of the tariffs. But it's been climbing a lot recently. And one thing I mentioned in a recent thing I said and sent out to subscribers is, anyone who follows the copper market and has followed it for years and years now, and I should have put one in this presentation, but I didn't. There's these long-term supply-demand charts for copper, and it was always sort of a tomorrow, I love you tomorrow kind of story if you're a copper investor. But there's this inflection point where you start seeing a real divergence between supply and demand, with there not being enough supply to meet demand. And that divergence goes very rapidly once you get past this inflection point. Well, we're there. We're at the inflection point now. And you got a lot of copper production comes out of these giant South American porphyries that are old mines. A lot of these mines have been producing for 60, 80, 100 years. I mean, incredible longevity for a mine site. But they're a lot of these things, they're getting to the point where they're starting to scrape the edges. They're definitely getting to the point where the grade's dropping. The average mine grade for copper has been dropping for years now. So that supply demand gap is just going to get bigger and bigger. We see enough price increase. There's going to be some substitution. I mean, my house was built in the 70s, and most of the wiring's aluminum, but it's got what they call copper tails on it because aluminum had some fire issues because it gets hotter than copper does. It's not as good a conductor. Even so, the copper tails kind of solves that. And I think we'll probably see a return to things like aluminum wiring and residential stuff as long as it's done properly. But that'll help, but it's not going to be enough. I mean, I don't see any way around this growing supply-demand gap. And there's just, mining's just not something. You can't find 1 billion ton porphyry and put it in production in 2 years. It doesn't happen. That's not possible. It cannot be done that fast, no matter how much you want. So I don't know what the copper price goes to, honestly. I know it's going to be a number where I'm going to be shaking my head. I fully expect to see per pound copper prices at double digits. And if you'd asked me whether that was going to happen 2 or 3 years ago, I would have laughed my ass off. But now, $10 copper, yeah, it's probably going to happen. I don't see what stops this train because there's no short-term solution to the supply gap. It's just there, and the market's going to have to deal with it. And normally, the way market deals with supply gaps is with price. You increase price until demand moderates. That's how markets work. What kills the fun? Beats the hell out of me. I don't know what it'll be. Until very recently, I thought it would be Trump doing something really stupid. But I mean, he does something really stupid. If he does something really stupid, it's Wednesday. I mean, and it doesn't seem like Wall Street cares. I mean, he's done some pretty crazy shit the last few months, and Wall Street just shrugs it off. And it's not even like they don't think he's serious. Wall Street just doesn't seem to care. So apparently that's not going to be, I don't know what he could come up with that's going to stop it now. That's going to spook people more than what he's already done. Some major geopolitical event, that might be what it is, but I can't tell you I know what that event's going to be. I mean, often that is what puts a stop to things. I don't see, there's some slowing in the U.S. economy, but it hasn't slowed that much. I mean, is there potential for a recession? Yeah, but I wouldn't say it's like the most likely potential outcome. I mean, there'll be one at some point. There always is. I mean, economies are cyclical, but it's not like the brakes are really on in the U.S. It's slowing down a little bit, but that's it. So not enough to really spook me. Basic change in the perception of gold and silver, again, possible, but I don't think it's that likely. You've got a bunch of institutions in it now. You got a bunch of retail traders in it now. That's a lot more short term. Those guys get spooked easily. You will see these big bull market corrections because those are the guys that tend to freak out and sell fast. But, like I said, the biggest underlying change in demand drivers has been central bank buying, and I don't think that changes. I think the geopolitical landscape has shifted, and I don't see it coming back. Even if they impeach Trump tomorrow, it's going to take a long time. It's unfortunate, it's sad because it's such a great country, great people, but it's going to take a while for the U.S. to get the trust back from international actors, even if they did that. So I just don't see this as a short-term change in the markets. It's not something that's going to change. And the last thing on the list is, frankly, the most likely. Unfortunately, it's something I can't tell you what it's going to be. A black swan event. I mean, what's it going to be? I have no idea. That's why they call them black swan events, because you don't know in advance what they are. That I guess is the most likely thing. I mean, that's going to happen anytime. But based on the overall market, I mean, this feels like a bull market that's got at least another 2 or 3 years in it. But the one potential problem is black swan. But I don't know what that is. It's a black swan, so I've got no idea. Well, if it happens, it happens. I'm not going to lie awake nights worrying about it. I mean, I've got a great bull market to trade in, and I'm going to trade it. Basically, this is the best metal markets any of us will ever see. Like, it is. You're not going to see a better metals market than this. This is the best one you'll ever see. So, take advantage of it, trade it. It's hard to buy when prices have run, and I'm not suggesting you should chase everything. I don't love chasing stuff myself. But the truth is, if this move has got another 2 or 3 years in it, and I think it probably does, prices of successful explorers and developers are going to be much, much higher than they are right now. You're all going to be surprised at the market cap some of these things reach. And that doesn't mean, you should just throw darts and not think about it and lock stuff away in the bottom drawer of your desk. I mean, you should trade stuff. You should take profits. You should move money out of the market. I mean, you got to protect yourself. You got to maintain, some discipline. And the nice thing with a bull market, if you're lucky enough to be in one and get in early, you'll see price movements in a lot of your holdings where you can take all your money off the table and still have a substantial part of your holding. And that's what you want to do. I mean, if you can get to the point where you're playing with house money, that's a great place to be in a bull market. Like, yeah, you wait too long and a few things, you're going to get whacked on this or whacked on that. But if you're playing with house money, it's a lot easier to sleep at night and recognize that, yeah, there'll be a couple you get whacked on, but that's the price of admission in a bull market. So don't be afraid to do it. And obviously we're all going to have to watch for whatever the hell that black swan event is. I don't know what it is. We'll hopefully see it coming, or at least see it early enough in its progression that we've got time to really lighten up on things that black swan arrives. And basically, that's all I've got to say. I mean, this is a great market. I've always traded these stocks. I mean, I came in from the mining and exploration side, so I love the discovery process. I love the exploration process. I'm not a geo. I just play one on TV, but I've been doing this long enough that I can look at early stage targets and have some feel for what the odds are. And I've always played these. I'm always going to play them, even if we get through this and into a bear cycle. I'll still be trading these stocks because that's what I do. But you're lucky to be in one of those very rare periods in the resource stock cycle where it really can generate life-changing gains. So if you get on a high conviction trade and it's working, sure, take a bit off, get your initial capital out, but pick a few and don't be afraid to ride them, because this is where you can literally make life-changing money. And this is not an Amway commercial. I can't believe I just said that, but that's my conviction in this market. So there you go. That's you can come and throw the rotten vegetables at me in a couple of years when shit goes sideways. Okay, that's all I've got for today.